Well, g'day, jet setters. So here we are. It's about midnight, Monday night, or Tuesday night, Australian time. So Tuesday session in America, in US time, is about to fire up. So for me, the big thing that I've been watching in the markets that I trade and track, the red line has been crossed in the S&P. That's at 44.80. I did think it was going to turn high momentum, big move, but it turned and then it went. How much of that is just a bit of stopping out in Asia? Well, I don't know. I mean, time will tell. But to me, that is just about, well, it's kind of game over for the down move, and I think we're going to go here, 54.40. It's only 40 points away now. That's like 20 minutes trading. Right? I mean, that's just one good result in results seizing and it's off, right? So I'd say it's going there, breaking new highs. I think we'll see buyers will be coming in here. The only people I'd say that, I think that are holding on that this is still a move with more to go on the downside, the Dow theory guys and girls, and their tenets, one of their key tenets in terms of these moves is, you have three phases. First one's got to be more than 3%. The second one is a retracement of more than 3%, which it is, and then this is not meant to break these previous highs, and then we'll see like a move down past the previous lows. They're the only ones that will be saying that further move down is still on. So I don't think that's really going to carry the day. Having said that, I do give him a little bit of credence because there's still a couple of things that have bothered me about this move in my mind, that it's still not complete, although the chances are very, very slim now, right? I mean, those three things I think are one, this big trend line going back is, it's a definitive line and it's broken, and I'm not sure if really, we can find a new line that is being formed, new trend. I'm not quite sure. Time will tell. But to me, this is broken and a new trend hasn't formed. Right? So we're still in a broken state of flux. That's without a doubt, a shadow of a doubt. That's one. The other one is we've got still got this engulfing bearish candle, which have happened like a dozen times over 40 years, and they all have followed moves basically greater than 6%, and we haven't really had that. I guess we've had it just on 6, right? So the smallest, that's the smallest of the range, right? So it's a very small correction and very short, given that price action. So to me, there's still the jury is still out a little bit. And I guess the third thing is the retracement that we've had certainly doesn't cut it for first base for the whole move, that 23 retracement. It doesn't even cut it for that move, right, which was 42.34, which we didn't get. I think when you start looking at these ones, but I don't think they have so much, credibility in terms of where these moves originate from and the retracements thereof. So it's been a shallow move. It hasn't hit any of the typical minimal retracement levels. It's broken a trend here and hasn't established a new one, and will take some work to get there. And the third one is it's still recovering from an engulfing bearish candle. So those three things are still in play. But notwithstanding that, the chances of that holding the day are minimal, I think. The price action doesn't lie. It's busted that previous high there. 4483 gone through today. Will be interesting to see if that gets confirmed. It looks like it will. Time will tell. Now, I guess more broadly though, and these are some other things in the back of my mind, there are some weird things happening in a whole lot of markets. And to me, some of this price action is kind of ignoring some of these things that are happening elsewhere. This is copper, right? That's, to me, this looked like it was going to break to the downside. These kind of patterns. We've seen this pattern in gold as well, actually. To me, it was looking like it was going to break to the downside. That's typically what happens in these run-ups and these narrowing triangles. It's broken up substantially. That's copper. The Baltic Dry Index, which is the cost of freight, or an index of sorted freight costs across the world, it's come off its peaks, but it's had like a massive, a really massive run up. These levels here, that was, towards the GFC, right? But you can see it is at insane levels. Right? It's just insanity, right? So that's a key commodity, which is copper. The Baltic Dry Index is a key input into the supply chain constraints. When we look at the US Treasuries, if I can find it, there's Treasuries. You can see it kind of clearly here. They really look like they're about to tank to the downside. That's price, not yield. This looks so fragile. To see that bouncing, technically it looks really, really ugly, like it's totally about to tank. That's not good for the Nasdaq, not good for the S&P. And I guess those higher rates, that does reflect some of what's going on in the economy that we see in copper, like spiking up, and the Baltic Dry Index. If we have a quick look at gas, like natural gas has had a bit of a spike. It's not obscene. Gas is volatile, right? Not obscene, but this spike here, 2018, it's in November. Just that period from September to December in 2018 saw a 20% drop in the equity market in the S&P, and we're like way above that, right? So, even, I guess, the other classic, even in Bitcoin, right? So Bitcoin, I've got to look at a logarithmic, right? Even Bitcoin is like breaking new highs. It looks a bit like copper, but you can see these things, right? Bitcoin breaking up to new highs, copper was breaking up to new highs. You turn this upside down and you see the treasuries. Again, you look at this market and that looks like the S&P, like about to break new highs. And it's just very incongruous that something like Bitcoin, which has got no intrinsic value. The value in Bitcoin is that other people want to buy it because they think other people want to buy it, right? There's no intrinsic value in Bitcoin whatsoever. And it's had a screaming run and it looks like it's going to new highs. Then you've got copper, which is a key component in the manufacturing chain, which is, hitting highs. Oil and gas, Baltic Dry Index, all on highs. Interest rates long-term rates really looking like they're about to tank. Now, none of those factors are good for the economy. People pouring money into something that is essentially worthless is not good for the economy. When we've got those key components, in terms of the actual real economy, interest rates going up, right? That's not good for the real economy. Copper, key input, going up. That's not good for the economy. It's a sign of strength of the economy demand, but it's a cost that will come through in terms of inflation. Again, the Baltic dry, gas, all those things, none of them are good for the economy, yet we've got the futures have it looking like they're going to tear away again. So to me, these things just do not add up, and it is a concern. I've been trading the markets for 30 something years, right? And I remember back, leading up to in the 90s, leading up here, I thought I was a genius investor, right? I was just riding the market. Even to the GFC, I thought I was a genius investor. I was just riding the market, right? .com happened. It's going, okay, whatever. A few margin calls on the way down, survived. Same thing. Now, all these runs, this big run, right? I don't think I'm a genius investor, right? My core portfolio is long and leveraged and always has been, right? So I've been making, a killing on that. But I don't feel good about it because it's just all seems to be built on sand and free money. So, you can call me a skeptic in terms of the market, like where it is and where it's headed. To me, it's based on free money, and it's money that's become worthless because rates have been so low for so long, and that's changing. And so when we see a very shallow pullback and a sharp bounce, to me, it just lacks a bit of credibility when I see other things happening. Bitcoin, which is worthless, intrinsically worthless, going to new highs. Key ingredients to the economy, like copper, gas, oil, and then the cost of moving those things around, the Baltic Dronix, all hitting highs. A lot of those highs, when we look back, correspond to the 20% correction from 2018, and at the same time, yields, long-term yields, look like they're dropping off a cliff. This doesn't make sense to me. Anyway, that is a bit of rough technical analysis and a bit of a rant. It'll be interesting to see today what happens here, whether it flows through. You can see on the 1 hourly, there's still this negative divergence happening. On the 2 hourly, same thing. Still looks toppy, due for a pause, but has rolled over on the weekly. But the money that is free is still pouring into the market, and despite my skepticism, it looks like it's got more to go. Okay, have a good one. Ciao.